What's up, guys? I hope you're all doing well. So in this video, I'll go through the price action from the last 2 days, namely the Monday and Tuesday, the 11th and 12th of October. I will showcase the opportunities that the market presented us, and I will also show the trades that I have personally taken. But a little disclaimer, I didn't really take all the trades, so yeah. One more thing, just for the record, the price action today was not really the best one, but on Monday was really extraordinary because we saw a lot of simplicity, clarity, and not only the amount of setups, but the quality behind them was really wonderful. And you had a bunch of opportunities to short this pair. So yeah, let's get into that. And as you can see, we are, as always, starting at 1 hour time frame. And going into this week, I had this two order blocks um, and two supplies marked out, this one and this week. And you will now understand why this week is more important than the one order block that is really higher. And I had this week marked out, and as I said, you will understand it better as soon as I get on 15-minute time frame. So as you can see, the marked out order block on the top is actually a simple order block that didn't really break this point of structure. This point of structure was broken with the help of this order block, so we can refine it to this candle right here. So that's why I wasn't really looking at the higher order block, so we can now delete it. So our 15-minute demand is here. This is the last candle before the bullish move to the upside, and it has actually broken a bunch of structures here, 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 and here. So yeah, a really valid demand just for now. So what I was anticipating the price to do is actually to come and sweep the liquidity above this high, because this high didn't really mitigate any order block, any supply. So there is a bunch of liquidity resting above. And then to come, oh my God, to come and mitigate the demand by sweeping this trend line liquidity as well. So now let's play the price forward in 15 minutes time frame, just to make it faster. As you can now see, we have actually tapped in our order block. So look, we have now tapped into the order block, and our wick is higher than the previous high. And if you look at the next three candles right here, you will actually understand that this was a liquidity grab or liquidity sweep. So let's visibility 15, please. So yeah, this is a liquidity grab. And now let's mark out the demand that caused the break of structure all over these highs right here. Even though there are substructures, the demand really broke them. But yeah, what we want to see now is whether this demand holds or fails. So now let's go onto 1 minute time frame, and as you can see, we now showed a clear bearish momentum, and we broke this point of structure to the downside. So to this point, I was not looking for buys just yet, because we didn't really showed any intention, and trade the order flow until it fails. So in this case, I put my stop limit, sell limit order on the equilibrium for one simple reason, to minimize my stop loss and to give the trade some breathing room, because we had this equal highs. So, I was kind of accounting for this order block too. But as you can see, the price comes back, doesn't tag me in, and then goes away. So yeah, trades like this happen. I was not mad, but yeah. And right after I actually analyzed it, since the range wasn't really big, that was my mistake, but we learn from mistakes, and I hope you will learn from my mistake too. But afterwards, what we see then is a range that creates initiation out. So let's play the price forward and you will see initiation out with a strong momentum. So we now anticipate the price actually to come mitigate this order block here and then to go lower. So at this point I have set my sell limit order from the equilibrium once again, because the range was not that small, and I have targeted 14 RR. So let's get it out of the way. So yeah, now let's play the price forward, and as you can see, we get tagged in, and really important part of this trade is that we have actually liquidity to sweep before going down. And then as you can see, an instant reaction, continuation, and a great momentum shows up. In this case, you're probably, feeling yourself nervous. Let me do it this way, like the price has slowed down, and you might think like I should take my order and close it, or I should move my stop loss really tight to somewhere here, or so in this case I was not moving my stop loss anywhere down to here, just because I saw that this is a trendline liquidity to sweep, and it was actually more so a confluence that my trade will play out. So as you can then see, we actually sweep this liquidity and go and secure the take profit. So yeah, this is a great 1 to 14 RR trade. Could have been a let's see, if I could have been a it's 16 or something, it's 10, could have been a 24 RR trade, but that's fine. So yeah, the target was actually the refined 2-minute order block. So I will not show in this video because it's actually far left, and I wanted to make this video a bit faster, so it will not be that long as it always was. So then we react from the order block, and one simple tip that I want to give you is then stop looking at the price in 1 minute time frame. As soon as your take profit hits, go look at the bigger picture, because you now probably wanted to sell from this order block to target, as I have said it earlier, this demand zone. Well, the idea is right. But if you go back to the 15 minutes, we actually have broken the the demand, that created new supply, which we now want to mitigate. So in this situation, I was not in front of the charts anymore because I had some work to do. But I actually marked this supply out. And since we swept the liquidity from this trend line, I was expecting the price to mitigate this order block, show reaction, and then still come up higher. So let's see what the price actually does. As you can see, it shows reaction, but then goes and mitigates the order block I was talking about. And now what we want to see is actually we want to pay attention to the structure. So higher high, higher low, higher high, higher low, higher high. Let it be here, higher low, higher high, higher low, higher high. So we have this demand here. We have this demand here that broke actually pretty much equal highs. So as soon as we tapped in the higher time frame point of interest, we want to see a mitigation, sweep of liquidity, a supply to demand flip, break of structure, new supply getting created, and then to sell from that supply. As you can see, we then failed to print a new higher high. Oops, on that. And then we break the demand. So this is now S&D flip, supply to demand flip. And now what I would have used if I was in front of the charts, I would have checked whether we have an inside bar range. And as you can see, this is our range. So I would have put my sell limit from this point. And as you can see, just because my stop loss accounts for this wick, I wouldn't have put my sell limit order from this equilibrium. So now let's see. And of course, as I have said, the idea behind this trade now is actually we want to see this demand getting mitigated. So yeah, the target is the equilibrium of this order block, the demand. 23 RR trade possible. So then the price takes us in. We show a great reaction, and now about managing of the trade. As soon as we broke this point of structure, the stop loss either at break even or above this high. All right, because this is the candle that actually broke, that actually started the move to the downside and broke the structure. So now I will not actually look for the scale ins, just to make this video a bit faster. So now we see a great reaction, a bit of range, and a further reaction. So as soon as we now broke this point of structure, I would have managed this trade. Let's actually see if the trade idea will play out. So this is the candle the last candle before the candle that has actually broken the structure. And as you can see, it's going to be better visible at 1 minute. Yeah, so this is the order block. Even though it's really small, it means that I would have put at equilibrium, or this here, and 1.5. So as you can see, a nice trade that would have played out too, and the same target as the first trade. It's nice 9 to 6. So hop back on 5 minutes. The stop loss would have been around this high now. So now let's see what actually happens. Is it mitigated? No, it's not. So the trade profit is not hit just yet. The stop loss is still there. But yeah, at this point, the stop loss is hit. Oops. The stop loss is hit, but you know, looking at the price action now, I don't really know why wouldn't have I moved it to this point right here, because you know we broke this new point of structure, and then you know it's hindsight, not a big deal. So even though this one was a break even or something, we actually got a great 12 RR, and this we can even account like -1 RR, not a big deal. So yeah, it's a cumulative of 14 plus 13 plus -1, so it's like 14 plus 12, 26 RR, while taking only shorts. So it's a great result. So yeah, let's actually move to the next day, namely Tuesday. So we had this, let's actually make it a bit bigger. We have this range and then impulsive break to the upside. So in this case, I was actually looking to buy, even though we had this. Let me turn this indicator off. Even though we had this bearish leg, I still looked to buy, and you know we mitigated this demand. As you can see on 1 minute, we didn't really close below this demand, so this was something to pay attention to. We have only wicked, which means we took the liquidity out. We showed the great reaction. So at this point, even though we didn't really break any structure, as I said, I was looking for buys because there was a great move that has broken this point of structure, and the demand was still respected. So I have set my limit order at the equilibrium with this time 16 ticks or 1.6. And you know, looking now at this trade, it was really kind of wrong because we didn't really have a break of structure, but you know, we had this inducement or liquidity. So this was kind of building a great story to my trade, and as you can see, I got tagged in. Now we are kind of ranging for let's see, was it 20 minutes or so? So it was actually almost 30 minutes. Um, but as you can see, I didn't really got taken out, and since the price was ranging for 30 minutes, I set the first target at this highest, even though we had liquidity to sweep. I wanted to uh, put some um, partials, so I could have secured some profit. And as you can see, I took some partials, and it was actually 40% of my position, and I immediately moved my stop loss to this high, to this low, sorry, because we had this great order block here. But I didn't really look to scale in. So yeah, at this point, I was still in the trade, and here, oops, my bad. We have now liquidities to sweep. I'm still keeping my stop loss at the break even, but this time I was actually once again worried about the trade reversing and going lower. And this is why, because we actually showed the momentum to the downside. So at this point, when the price has actually come back to this high, I took 20% more off the table and put my stop loss to here. Oh my god, to here. And then, as you can see, we sweep the liquidity, and this was the moment when I have put my stop loss right, oh my god, right on this high, and took another 20% off the table. So I was running with 20% left. A weird kind of management from me, because the price was moving so for like 2 hours now, and I was still worried that it was reversed any minute soon. So that's what actually has happened. As you can see, I get taken out here. So the last 20% are still in profit. So this was a cumulative of, if I'm not wrong, it was 6 RR, but it was only 3% because I was risking only 0.5 because I was going against kind of momentum because we had this big bearish lag. So yeah, let's get this away because this is not really looking good for me. So yeah, as you can see, we have actually broken this point of structure, and this is a oops, demand as well. So yeah, what happens next is we now want to see what was the point when the last point before the demand got broken. Now we want to find the order block. So as you can see, the move has started from this bullish candle right here. So we now can place an order 1.5 pips. And at this point, what I would have targeted is these lows. So let's see. Let's put the target there and see if our yep, we get tagged in, And then as you can see, great reaction, some range, and a once again great reaction. So at this point, it is both a liquidity sweep and a break of structure to the downside. So at this point, I was in the charts and I marked this area out and put my order. If I'm not mistaken, it was equilibrium, and the target was 6RR as the first target and 8RR as the second target, and the final target was 10RR or somewhere abouts, and it was actually like the low of 1 hour. So yeah, it was very deep down. So let's see, we have a great reaction. Let's make it a bit faster. And then, yeah, as you can see, the second trade doesn't get filled, but we still managed to secure the 7.2 profit. So yeah, I was really happy with that for the day, 7.2 RR and 6 RR. So it was like 10% on the day. So yeah, at this point I was not in the charts anymore. And the price then has showed a clear intention to go to the downside. So let's see what happens next. So yeah, let's play the price forward. We retrace a bit, make equal lows, and then a session and a day is pretty much done. So yeah, we can get out of the replay. So yeah, these were the 2 days, Tuesday and Monday, and I'm really happy with the results right now because the last week was a little bit of devastating for me because the price action was really choppy due to the bunch of news. You know, the price was moving really slowly, and it was a more of a accumulation of liquidity. So there were opportunities, but they were not that clear and qualitative as they were today and yesterday. So yeah, a nice plus 24 RR for me. And you know, the most important is not the RRs, but the lessons that we learn every day. So yeah, I'm really hopeful that this video was informative and you got some answers to the questions that you might have asked and you might have wanted to ask. Like, why did this trade play out? What was the reasoning behind this trade? So yeah, I hope you will like this video, and I'm really sorry that this video was kind of passive and with a more amount of mistakes from my side, and the most important mistakes of my language, because you know it's 12, it's almost midnight, and I need rest, and I think I will get one once I will finish filming this video. So yeah, once again, I apologize. But yeah, I think there is a lot of value in this video, so I will hope you like it. So yeah, leave as always a feedback And if you have any questions, feel free to ask me. And we will back tomorrow with yet another day on the market. And I hope you will bank some great profits, and you will make a one step closer to the freedom and to consistency. And one more important tip is, if you see the guys um, making great profits, and catching like 20 RR trades, and you're not doing that, don't be sad about it, and focus on yourself. Work harder, work smarter, and back test. Learn from the failures, from the losses. Ask yourself questions: why did it do so? You know, uh, but don't get you know depressed or sad that you have lost today, because with one loss, a new victory comes, and a new victory is closer. So yeah, I will stop waffling now. I will hope we will see each other soon. So yeah, have a great day.